Hello and thank you for joining me. I'm Brian Engel with the Chris Fritch team at eXp Realty, and today's video is about two simple things: mortgage interest rates and home prices. So stick with me and check this one out. So first thing we need to do is find out what's the average sale price going on in the Twin Cities region right now. And here you can see it's 445.9. So, you know, let's simplify those numbers a little bit and go over to our mortgage calculator and punch in 445. And basically what we're going to do is we're going to try to buy a $445,000 home. So we're going to put 10% down. We got a loan amount of $400,500. We got today's interest rate of 6.62%, which, is below the national average if you look back to the 70s. So that's something to keep in mind. 30-year loan. We're going to close in November. Home insurance is $1,200 a year. Taxes, property taxes are about $4,000 a year. So that's going to give us a payment of $2,996. Some people might think that's a lot of money. True, it is a lot of money. Let's say our interest rates do drop to 5%, 5.5%, just theoretically. And maybe who knows when that's going to happen, right? We don't know. But we know that interest rates are kind of staying the same, but what are home prices doing? Right. They're appreciating like they always do. I mean, if you look back here, look at that line. This is back to 2008 or 2005. There's a dip here, 2010, 2012. But we had some ridiculous things going on. If you could fog a mirror, you could get a mortgage. Non-income verification loans. Whose idea was that? Anyways, so this line's climbing. That's home prices. They're appreciating. So let's just get back over here into our calculator, 5.5%. So because homes are appreciating, while we're waiting for the interest rates to drop, home prices are going to keep getting higher and higher. So let's be conservative and say this home appreciated 5%. So that would give us a number of 467,000. And now we're at 2819. But I have another question for you. If interest rates hit 5.5%, do you think you're the only buyer that's going to jump into the market? No. There's millions of people out there waiting to buy or sell or both because of the interest rates or because of the home prices. So realistically, if interest rates drop to 5.5%, it's going to be back to a seller's market. Right now we're in a buyer's market, just FYI. It's going to be back to a seller's market. So this house is going to be listed for $470,000. That brings us up to $2,835. And the reality is we're going to get back into mayhem if interest rates drop into the 5%, 5.5% range. And there's a good chance that you might have to offer over list price for this home. So let's say you do $490,000. You offer $28,000 over. Now we're at $2,937. So if we look back to our original price, or our original payment per month of $29.96, and now we're at $29.37, we saved $59 a month. But did you save $59 a month? No. You robbed yourself of quite a bit of equity. And let me show you why. So if you remember when we were at 445, oops, not million. If we're at 445,000, 10% down, our loan amount is 400,500. But since we got caught into the waiting game and had to pay more for the home, we ended up with 441 as the loan amount. So we just gave away $40,000 in equity. Oh, and there's another thing. Since you're in a multiple offer situation, you might have to get all crazy like it was before and might have to give up, forego that inspection. We're not going to have an inspection on the home because we're competing and we want our offer to win. So let's not do the inspection. And then, that appraisal gap. Remember that? That was never a thing. Now all of a sudden it's a thing. And that's going to come back too if it becomes a seller's market. So you got an appraisal gap that you got to cover, possibly up to $20,000. So what do you think? Does it make sense to wait? Let me know. I really want to hear your thoughts.